can share with you a strategy that are used by many renowned investors, worldwide. They can use these strategies to make, hundreds of millions of dollars a year. They use this strategy called growth investing, right? So what exactly is growth investing? Now, growth investing is actually strategies for us to go after capital appreciation, but not so much on passive income like dividends. All right. So we want to invest in company that is growing at above industry average earning growth. And then oftentimes these companies, they would fetch a premium valuation. Now, so if you look across the company growth phase, so when you invest in startup, the risk is very high, but the potential can also be higher. We can participate in the story of growth stock. So these are the listed companies. They may not be in the main board. They could be in the second board. So these companies are still growing at a very rapid pace. They haven't captured a new market share yet. They are constantly rolling out new product and new services. They are revamping or innovating on their business model. So the risk is much lower compared to startup, but potential will also be much lower. But it is still quite high in comparison to a blue chip stock, right? Blue chip stock is a well-established company with maybe 20 years of operating track record. The market is probably matured, so there are not much room for huge growth. So that's why they're giving out a lot of cash as dividend. When it comes to investing, we must get our strategy right, because not all stocks are created equal. So there are stocks in different categories. For blue chip, is to buy and hold, right? So to get dividends and to grow with the company, albeit at a slower rate. Now, defensive stocks are stocks that are defensive against all the economic cycle. So income stock means companies that give very regular and high dividend payout. So income stock is also for buy and hold. Okay, so if you buy in a stock, then you get passive income. Now, growth stock are stocks that are growing at above average industry growth rate. So these are stocks that are new in the market, maybe listed for 5 to 10 years, and the growth stock typically are more expensive. Fifth, we have cyclical stocks. Like the name suggests, the stock have to go through economic cycle. Okay, so this is the opposite of defensive stock. So we want to buy low and sell high, and we don't hold long term for companies that display cyclical nature. Now, six is turnaround stocks. Now, turnaround stocks are stocks that have experienced a period of severe deterioration in their business, and now they have plan, right, to make sure that they are back on track. Next, we have sunset stock, right? Sunset stocks, like the name suggests, right, is companies that have experienced a long period of lower demand for the product and service, and they'll be out of the business game sooner or later. So next, we have speculative stock. Speculative stock are usually penny stocks that are highly volatile, sometimes high trading volume, very low market cap. So this could be a nano company or micro company. If you want to achieve growth, I think that it's easier for us to focus on these three. Okay, so I categorize all this according from the lowest risk to highest risk. So in growth investing, we want to look for the catalyst that can transform the business, okay, that can turn around a business. So what do you need as a growth investor? Number one, you need simple mathematical literacy, okay? Number two, you must have common sense. Number three, you must have basic fundamental analysis knowledge. Most importantly, number four, okay, you must get the exit timing right. For growth and value stocks, what are the difference? Okay, so in terms of growth, right, we look for high growth companies. For value investing, we look for stability. So why should we go global? So this is Bursa total market cap in comparison to the US is 50 trillion US dollar. Okay, this is how big the difference in terms of market cap. If you compare this performance, okay, Bursa actually underperformed the US market. If you compare Bursa against the Asian market, Bursa actually underperformed key Asian market except Hang Seng Index. If you compare Bursa against European market, we actually also underperform. So that's why sometimes we have to look elsewhere for growth, right? So if you invest in US, you can invest in some of the largest companies, top 1% quality company. So another consideration for you to invest globally is to have protection against the currency devaluation. All right. So see, this is the performance of ringgit against a basket of currencies here. Okay, we're actually down.